We got node validators or miners. If you guys had to pick one, and I think I know what you guys are going to say, but I want to hear it firsthand.
Validators. So we started off our project looking at miners and as a external revenue source, and we quickly realized that validators are the way to go.
If we picked
Just
up
no
miners
hardware.
a year ago, like everybody was, from what I've seen now, they're basically like a lot of them have been turned off because it costs more to run them than it's actually bringing in. And with validators, they're usually run off of a high-powered computer, which could be done through a cloud service. And so those actual physical systems don't actually go bad. And you buy the coins, and then you just basically you're staking them. It just changes the game. It's much more energy efficient. Yeah, I wouldn't do miners at this point. We literally got to the point because we were going to use crypto miners. We designed a whole system using shipping containers and actually going to liquid cooling with dielectric liquids, and basically figured out how to create our own tanks to submerge these things, because we realized for the miners, when using the liquid cooling, it was much more efficient. It used like half the electricity, plus you could overclock the miners because they ran cooler and you can get more out of them and they lasted longer. But that was going to be a ton of physical work, and it would take months to get set up. And still, even if we were looking to go that route, the miners are still expensive, and at this point, you're probably getting used miners that who knows what condition they're in and how long they're going to last. Eventually, they become a paperweight, though. Very expensive paperweight.
Yeah, miners are definitely tough. You have to be very smart, I think, when you're looking at the longevity of whatever type of coin that you're actually mining. But I definitely wouldn't disagree. I definitely think nodes are the way to go. Moving forward, I kind of want to get into more of who you two are, before we dive into Fathom. I know there's a lot to get through with Fathom, so I don't want to take too much time answering, questions. But I want to get to know you two a little bit, your background, your experience, and then we'll dive straight into it.
Yeah, sounds good. So my background with, I guess, life. So I have a degree in computer networking from when I got out of high school, or shortly after high school, and learned quickly if you don't have work experience, you can't get hired. I wound up going back to school for aviation. I didn't finish that because I wound up getting custody of my oldest daughter, so I had to kind of change some things around. The company I worked several jobs, and I worked in restaurants. I worked construction for a while. I've been with the same company now for just over 9 years. Big corporate company, and I get to watch how all these decisions that they make are just are dumb. I guess it's they're not making decisions for us that are working for them. They're doing it based off of looking at spreadsheets, looking at numbers, and deciding what's best, and then try to sell everybody on it, which is kind of laughable.
Mm-hmm.
But I played around in the stock market for a while, and I saw Safe Moon, and it caught my eye because I remember looking at the chart, and it was like ridiculous amount of gains over a couple of days, and so I bought in at like the all-time high. Luckily, I didn't hang on for too long because I saw where that was going. So, but then I started looking around and got excited for some like fair launches. I found one and made like 13x in like 10 minutes. That was cool. The next 10 I found were like scams, so that sucked. But then we Everrise launched, and I paid attention to a lot of that and got involved there. A lot of that was actually became moderator, and that's where Bishop and I met, actually in the voice chat there. And during all of that, they had the buyback system, and a lot of people would come in and ask questions about if the entire buyback was used, what the price would do. So I just started learning how that whole thing worked. So then I can actually set up the basically an AMM simulation through a spreadsheet and take whatever value is in the buyback and put it out. So I could always answer that question. Well, if we use it all, the price will be this. It's gonna go up this much and stuff. So I kind of started there, understanding the AMM and what it all meant, and then just kind of started diving into every project that I could, the way they were launched, how their liquidity was set up, how their systems ran, what actually happened on the blockchain when buys occurred or sells occurred or stakes occurred, all of that stuff, because it intrigued me. So I had learned how all that stuff worked. And then I was seeing a lot of areas where things could be different and they could work better. And some of it was just through the management, how everything was controlled by the team, and a lot of it was through tokenomics. And I realized stuff that was happening was just not making sense for the investors. And so we started just looking at how everything was run. You could tell it was like somebody was coming up with what they thought was a cool idea. And we're like, oh, this is totally going to work. This is going to get a lot of people to buy in. This will be hyped. And a lot of times it didn't actually do that, because when it comes to looking at it as an investor, it's really not that desirable. And it didn't do what they thought it would do. It still required people to buy in and massively adopt that. And so we're trying to come up with a way where we could have a system that is sustainable, that's fair to all. And it doesn't matter what the investor does. And we'll still be okay, and the rest of who are in our system would be okay. And that's when, we started really designing Fathom last October, 15 months ago. And that's been our lives ever since.
Yeah, I'm sure a lot's changed since then. A lot has probably changed in your life since then. Bishop, how about yourself, man?
Yeah, so I went to school for neuroscience and minor in chemistry, and I got out, did some jobs, and then eventually became a neuromedical device sales representative, and ended up running the American branch of a small Israeli company for a few months, well, for about a year. And then COVID hit, so lots of life changes happened. I was able to find a lot more time to find a new passion. So that's where I met Sir Jay, and he kind of filled us all in on that. So, yeah.
Yeah, 100%, man. Awesome, awesome stuff. So let's dive a little bit more into Fathom. I'm sorry, Fathom. And what you guys are all building, because there is a lot going on, and I think I'd like to leave a lot of room for questions at the end. So I want to get into that real quick here.
Sure, and it's built like this. We're not building this anymore. It's actually completed. Just to clarify that.
Yes. Yeah. So let's dive in. Where do we start?
Well, I guess we'll start with kind of the whole portion of why we were looking at miners. All these projects we're launching and then trying to create utility to sell to bring in revenue, and then eventually just died. We're like, all right, well, why don't we just hit the revenue on to start? And that's where we came up with the thought of, we'll collect the money, we'll buy these crypto miners, get them running, we'll use that to buy back our own token. Was basically, or reward in some way. And that was where we started with it. There are other projects out there doing it. I remember seeing them, and they had like 11% tax, and it was like 4% to miners. And my first thought was, well, that's not enough. Like, that's your long-term sustainability. How are you going to use less than half of the revenue collected from taxes to actually sustain your project? So that's actually why we're doing 75% of everything we collect is going to build that revenue stream. That's kind of where we started with this whole thing. Do you want to continue on, Bishop, or have me just keep going?
Keep going, sir. You're doing a good job.
So then beyond that, we had joined this other project, and I bought in close to the top and staked. And you've got, I'm seeing what I'm receiving in rewards, which wasn't very much. And you've got, in this case, the lead hype man was like, oh, look at these rewards, they're so amazing. And I'm like, well, crap, that's kind of sucks, because I realized, he was buying in at the very beginning when they kind of relaunched, and I bought in like 20x higher. And so even if we put the same amount in, if we invested the same amount, he was getting 20 times the rewards that I was. And that just doesn't seem right. And that's how all of this stuff unfortunately worked. So we decided you know what, let's figure out a way to do it so that your rewards are based on your initial investment value, not the number of tokens you got. Because it's at that point, you know, if it's based on number of tokens, it really it gives a huge advantage to those who get in at a much lower price than to those who get in higher, even if you're both the same invested. And so that's where the whole idea of mass came up, where your rewards are based on the value of your tokens at the time of staking. And once we actually came up with that model and started digging into what it really means overall, plus the other strategies that opens up, it got really exciting. And that's you know, basically what Fathom is built around. And you know, so and the whole idea for that was, if I buy and stake the top, that my rewards don't go down to nothing and I don't get screwed over. Because let's face it, that's the easiest way to lose money, is to buy in and just hold on for dear life. Right? That's where HODL comes from. And I got tired of that, and there was really no other place to go. Even though everybody else claimed, oh no, we're going to last forever. You come in here, you're going to make all the money in the world. It didn't happen because their model didn't actually provide that safety. And so that's what we've created. So if you do buy and stake the top, and your tokens become worth, you know, 1% what you bought them at, you're still getting the rewards based on what you put in. And at 1% daily in that situation, you'd actually be receiving basically your staked number of tokens every single day in the rewards. And that is something you don't see anywhere else. Because again, it's all based on value.
Yeah, I love the way that you guys are going about it as far as trying to base everything on the value that actually is at that specific time. Right? You guys are, and that includes rewards, that include like everything you guys go about, or every way, everything that you guys go about doing is in this way. So it's a very, very interesting take on changing things up a little bit. Sorry, keep on going. Sorry, didn't mean to interrupt.
Oh no, you're good. Well, and it's kind of funny, right? Because so this we started again 15 months ago, and actually I don't remember the exact date, because I called up Bishop and I was like, dude, we need to base this stuff on value, and he was like, okay. I was like, no, you're not getting it. But it's funny because there's been times where we'd go back and forth, like, oh man, you should check this out, and the other one's just like, sure, whatever. And then it took a little while because we both think extremely differently, and that's why we've actually get along very well. But you know, so we started this so long ago, and it wasn't until recently that others are trying to use that type of model where the rewards are based off of a stable coin. But they're trying to, some of them have tried to, peg a price, which is not, in my opinion, it's very difficult to hold a pegged price because it's going to use a ton of capital. Not only were they trying to peg a price, they were also trying to let it increase in price, which is twice as hard to sustain. That, or you've got these protocols where you deposit funds and then they earn off it and pay you out a daily percentage, and we see how those are going right now. So there are others who have recently are trying to do what we're trying to do, but they've got these failure points in their system. Because if you're trying to peg a price and that's what rewards are based off, and you lose peg, you're done. It's going to be hard to recover from that. Plus, they're allowing people that they're having to pull from what they're earning with to pay back out as people are selling. And so it's actually messing up their overall base of what they're earning for revenue. So ours, it's all done through a liquidity pool. It's all done through taxes. Once we put money into our revenue stream, it stays there. We don't ever have to pull that out to allow people to leave our system, because anybody can just unstake and sell out of the liquidity pool. There's really no limits to that except for the one unstaking tax we have, which we put in there because of one of the features that doing everything value-based created. But I do find it interesting that a lot are trying to go with this model, but what they're also missing out on, and this is like, I don't think a lot of people realize how important this is. A huge portion in DeFi are looking to just trade. They don't want to put money in, have it locked up, and earn a percentage daily. They want to buy low, sell high. And so that's why we've got this stable rewards model tied to a tradable token. Because those who do buy and sell, we're going to collect those taxes, which is going to grow our revenue stream, but we're not having to pay out more Fathom to them every single day. Because, when it comes down to that dividend token called mass, essentially that's the total amount of that is showing our total liabilities, because we're going to be basing our daily APY based on how many of those mass we have. And so when people are giving us money to build up our revenue and we're not adding to our liabilities, that's going to be hugely beneficial to us. And all these other protocols that are trying to do things based just solely with stablecoin, they're missing out of that entire section of investors or traders. And so, yeah, we wanted this to be exciting for the degens, plus for those looking for the passive income. And this is what we've come up with. And I'm like so excited for this to get going, because I've been just visualizing this now for well over a year. And I don't even know what, I guess, the possibilities are as far as adoption will come out of this, So it's exciting that we're like so close now.
Sure. So the ocean is a rewards pool for stakers. And that's what we're paying out the stakers from, the 1% per day. And how we do this is a little bit different than everyone else. What we did is, at launch, we'll be splitting our total supply in half, and half our total supply will be in the ocean. So it'll be a smart contract that no one has access to. And the only way that tokens ever leave the ocean is through waves, which is a small percentage of the ocean being released to the stakers as rewards every 15 minutes. So we have ocean, we have waves, and the waves go to the stakers based on the amount of mass that they had. I'm pretty sure Sir Jay talked about mass, but just to make sure, mass is what's equal to the value of the tokens staked at the time of staking. So if you stake 100 tokens worth $1,000, you would get 1,000 mass. And now you're receiving a rewards of 1% per day based on the mass. So 1% of 1,000 would be $10 per day. You would get $10 per day in Fathom. And those would be distributed every 15 minutes in waves. So not 1% per wave, but 1% per day. And so that's ocean, waves, and mass. And that's the major points of our system, are those three key aspects. So another thing that we'll be doing is actually controlling the size of the waves into different tides and seasons. So we may have times when we want more hype, and 1% a day is enough, and we want some more hype. So would we be able to turn up the rewards and get new people in by just adjusting that and having a high tide? Or there might be times when we need to be reserving our ocean and we want to shake some people out, so we might go low tide. And that's how it's going to be fluctuating percentage rewards rate from our system. See.
Well, it'll also be automatically fluctuating, because, again, it's all based on value. So if people buy in and don't stake, and the price does increase, that percentage actually will increase, because now you're receiving the same number of Fathom tokens per wave, but they're worth more. And so the system itself is very dynamic. It's going to be constantly changing. I'm very constantly talking with our devs to make sure they have all the calculations set up so that the data is going to show correctly through our D app. Because if you haven't seen our D app yet, it's not all live on testnet, because for some reason they couldn't pull some of the values out. but it's going to be there's going to be a ton of information in there for your stuff, for the overall stuff. We wanted to be able to show all this because it's going to be interesting to watch, and it's going to be people are going to come in and ask a whole bunch of questions. So we're trying to already have those answered through the D app. But yeah, with the whole changing of the tides and stuff, when we were in Everrise, like as we were basically done with Everrise, they were kind of falling off, and they announced that they were going to merge to a V2 and add staking and launch on like 3 chains or 5 chains at the same time. I think it was 3, but nothing happened. But then they took the 6% tax going to the buyback and made it reflection. So they went from a 2 to 8% reflection token, and suddenly a bunch of buying started. And then they added the other 3% going to marketing and added that to reflection. So they went from a 2% reflection to an 11% reflection. And they went from like the lowest point they were since they had launched to a new all-time high. And I was watching that happen, and I was like, all right, so you increase rewards, it creates a lot of hype, and people come in. So I've kept that in my mind this whole time while we're building this out. So we have the ability at any point to adjust those rewards. Unfortunately, the owners of Everrise didn't pay attention to that themselves, because I was staked in there for a year and got like a 12% return for the entire year. And that was actually based on number of tokens. By the time we could get out, the price had dumped way down. So, but yeah, so it'll be interesting. We're gonna generate hype based on our own market conditions and the market around us. But then again, we can pull back for sustainability if needed. And when other people leave, it's hugely beneficial to the project, plus all the investors, because we've taken that dividend token and we're reflecting it. That's our only reflection, is actually the token that calculates your rewards. You will get more of those. So when you look at mass, for us is a liability, but for every investor, it's the value of their stake. And that value for every investor is only going to go up as others leave because of that reflection. And I'm surprised others haven't tried it yet. Because again, right, we're putting focus on mass because it's value, but every staking protocol has that dividend token. It's just usually called like Truth Seekers is called S-Truth. It's a placeholder token where normally if you stake 10,000 tokens, you get 10,000 of those dividend tokens. It's so the system knows how much of your rewards you're supposed to, how much of the total rewards you're supposed to receive. And it usually doesn't matter, or there's nothing special for it. But in our system, yeah, it's a huge part of it, and it's going to be, it determines how the value of your own bag, essentially your own stake, and what your rewards will be. And yeah, it's just gonna constantly go up, which is kind of that's difficult to grasp. And that was one of those where we came up with, because normally all of those are just burned when somebody unstakes. Because I remember when Bishop and I were talking, and this was again, 14 months ago or something. Burning the dividend tokens, it just means that every other dividend token is going to receive more. So it essentially kind of gives them a higher value. But then I was like, well, what?
G'day, market makers.
We were trying to figure out a way to then further reward those who are still staked. And that's why I'm like, well, let's just take this dividend to some of those and we'll reflect them to everybody else. So sure, they still get a little bit more value to each as they get burned, but now everybody that's there will get more over time.
G'day, market.
And so a massive unstaking, which is probably going to happen for us at some point, it's going to be hugely beneficial to every single investor because everything is based on value and those dividend token reflections.
Yeah, there are a lot of complexities to the whole system that you guys have, which I think everything has a purpose, and that's something that if you haven't yet, the thing that really helped me was some of the breakdowns, looking through the white paper and actually going through, what everything was, how everything was moving through that ecosystem. So if you guys are following along here and you have the ability to pull that up and listen in, 100% recommend it because it'll make things very, very, very clear. But yeah, you guys have obviously thought about this a lot. I want to touch a little bit more on the node validators before hopping into some questions from the audience, unless you guys wanted to lead into something else beforehand.
No, go ahead.
Yeah. So what specific validators are you guys predominantly looking at for the first, I believe, 75%, correct? Of the initial
75% of what? Sorry.
75% is going into the node validators, correct?
No, so 75% of all taxes are going towards the jet stream. Yep.
Gotcha.
And then a portion of that will go towards the validators, which probably 75%, a good chunk of it will be going towards it because it's the most stable and secure way for us to make returns on our investments.
Mm-hmm.
And the ones that we're looking off right off the bat is, of course, Ethereum, but Fathom is another big one that we've been looking at for quite some time, because if we would have got it back in March, it would have been $1 million. But now that it's down to about $100,000, we'd be able to get in now at a good price, and when the price returns to what it was, we'll be making a much greater deal, because this works much like normal staking works, where, say, if you invest 1 million tokens, then you'd be making 20% on that 1 million tokens per year. So the price of the tokens can go up or down. The coins, I should say, will go up or down. And if the coin was to get a 10x, then we get 10x more. So we'd be actually getting 200% of our total investment back every year. So right now, it may look like a slow play with only 20-25% back returns per year, but once the bull market returns for us, it will be a much greater investment opportunity for us.
Yeah, 100%. I think that's one of the key pieces about the validators in general, is now's the time to be getting into some of these longer term plays. If you have faith in network lasting, then 100% is something to look at doing now versus at the peak of a run.
Right, and we're hoping that we stay in the bear market for some time. Like, if we stay in the bear market for a full another year, we'd be happy.
Yeah.
Because our system was built for the bear market and to make this foundation now.
Yeah. I made a comment about that yesterday where, I mean, I don't know what's going to happen in the next few months here. We may see some kind of, it could be, we could get a pullback, or maybe we are entering, kind of this more steady, slow swing into a bull run. But regardless, I hope it's not that. I hope that we're in a bear market for quite some time, because honestly, I do enjoy the work that goes into building during that time. To me, it's tough, but it's also, there's something good about it. There's something good about it. So 100% I'm with you.
Makes you fit.
Sorry,
yeah, I'd seen a comment. Somebody's like, "Well, you've picked a great time, or a horrible time to launch." But we didn't pick this time. We tried to launch, March of last year, but we couldn't find the right people to develop everything, essentially. And so we've had a lot of delays, and honestly, every single one has kind of been a godsend, because it's pushed us further back now to this point where things are sort of stabilizing, I guess. Like, I'm just looking at the Fathom chart. It was down at that 20-cent range for a while, and actually we had just had a conversation, like, I guess 2 weeks ago. I was like, dude, look at the Fathom chart. It's actually looking stable now. I think we might be at the bottom. And now it's already gone up like 50-something%, which annoys me. Like, man, we can get this at 20 cents. Heck yeah, that's $100,000 for 100,000 coins, and now it's 160,000 for 500,000. Yeah. But I still don't think we're out of the drops. I have a feeling we'll still see another drop here. With all this other stuff going on in DeFi, more news will come out that'll cause the big investors to sell out, drop Bitcoin, everything else follows. That's probably what's going to happen. Of course, who knows? But
it's all speculation.
It is. And our plan is just like any investor. If we're buying 500,000 or 1 million Fathom coins to create a validator, we're not just going to take the money and pump it in there. We're going to slowly buy it, try to get those dips, because that's the smart way to do this. And I know one guy on YouTube was like, "Oh, what experience do they have?" Well, tell you what, I have no experience with Solidity at all. Yet we've got a full system that's very operational with 6 smart contracts and an API And I did that with no Solidity because we found the right people to do this for us. And honestly, I found out that just because somebody can code doesn't mean they really know what they're coding. Because it was like September when they first got everything launched and set up to the initial D app, like go test it. I was like, yes, we're almost there. 4-6 weeks, we're done, and nothing freaking worked. I was like, okay, guys. I was like, this is, and then I just like if I look through my chat with our dev team in September, gosh, I was looking through it the other night because I've kind of forgotten some of the stuff. All the things I like pointed out, this isn't working, this isn't working. Then they'd relaunch it, be like, all right, go check it now. And I'm like, all right, well, now this portion is not working. I can only, unstake 50% instead of before I was able to do it. So it was so much stuff that just doing the testing and getting things operating correct after everything was supposedly complete. I mean, that was a well over 2-month job, just that alone. I got to spend be at work all day, get home, and just go through and do transactions and try every little bit, made sure every single transaction worked. And it was a lot of work, but it's there now. But yeah, I did all of that with zero Solidity experience. So when it comes to running an actual validator, we'll find the right people. Even I mean, our development team, they don't really work in DeFi. We kind of got lucky to find them. And they have a crew that can handle everything. And we've already talked to them about setting up these validators because most of it uses cloud computing anyways. Because it's much more reliable than setting up, a powerful server at somebody's house or in a warehouse somewhere, and because that could go down,
Mm-hmm. Yeah, that definitely makes
So,
sense. 100%. Cloud computing has a lot of benefits. Let's just leave it there. But
right.
sorry, go ahead. What were you gonna say?
No, I was agreeing with you. Yeah, there's a ton of benefits with it.
For
It's
sure.
everybody's websites are probably running.
But I do want to get into some questions pretty soon here. Was there anything we haven't touched up on yet that you wanted to get to before we start getting into some questions?
Value based, the rewards going out. Well, probably something we've missed, but we can go to
touch
questions
on it afterwards too. That is totally fine.
Yeah.
So the first bit, I know.
Yeah,
Austin,
let's talk about the pre-sale afterwards.
Yes, 100%. We'll finish it off with there so people know where to go next. So first thing we got, Austin. How would it be How would it be sustainable long term if there's still a constant sell pressure on the reward token, where they use where they use the revenue to help with this? The revenue would need to be exponential versus linear, correct?
So I guess define exponential versus linear. If that means so okay, our revenue. I see where you're going. Our plan is though our revenue stream. We're not going to be 80% of what we're earning in revenue will go back to buy back Fathom to refill the rewards pool. And it's up to 80%. That'll be when it's really needed as let's say our own market conditions for our system is kind of in the bear market where we don't have new buys coming in and everybody's taking their rewards and selling or unstaking and selling. So we'll be creating our own buy pressure with our revenue. During times where we don't need that much though, it'll be a higher amount that we're using to compound into its own system to grow it at a faster rate. At the minimum, 15% will always be used to compound on top of the revenue stream. This way, even if we have no trading going on, it's still going to continue to grow on its own. And when you actually kind of visualize how that will play in with what's being sent out, we're not promising 1% daily. If we did that, that's setting us up for failure. Because at some point, yeah, that would be hard to sustain based on the total amount of mass in the system, the amount of revenue that's coming in and stuff. So we're not promising. So at points, as people do leave, as the price drops, as that APY drops naturally, because again, it's based on value, we're going to just have to let it continue to drop because everybody has a threshold. And, people will eventually unstake and sell out, which is very beneficial to us. It's kind of needed because it reduces our liability as those masks get burned, and it's beneficial to every other investor. And as the price of Fathom drops, as people leave, our revenue stream is not being negatively affected. It's still going to exist as it was. And as the price of Fathom drops, our buybacks become more powerful because we're actually buying back more tokens at the lower price. And so there's going to be a natural floor that is created based on the current amount of revenue coming in for the buybacks and the amount that investors are claiming and selling. We may never have to actually have revenue in equal paying out, because like if every single person that was staked claimed all of their rewards every single day and sold them off, then we would have to have the same revenue coming in as we're paying out to maintain the same price. But because the way our system is built, and there's a lot of other factors in for where money's coming from, and the fact that we can do hype and or drop the rewards for sustainability, it's not as important for us that we have to be at that level like some other protocols were, because we're not maintaining a price. We don't have to. That the value is locked in through that mass dividend token. And so I guess the linear, I guess I'm still a little off on that. What he meant
So
by
he had a follow-up. It might clear
good.
things up a little bit. He said, right, but the revenue stream would be used to buy back for a native reward token versus just revenue sharing with something like a stable. Because if price dips, and the percentage per day doesn't matter because it's based on native tokens with the blading price.
No, it's based on the stable coin of BUSD, which is where your mass is based on.
Mm-hmm.
And that's what and that's why we did it this way.
Yeah.
So look, we actually considered our initial model was we do this, we launch this thing, right? We get this, but then we were going to buy back and distribute, or actually initially we were trying to figure out if we're mining Bitcoin, then we would convert that to like BNB or BUSD and then give that out to everybody. The problem with that is we're utilizing Fathom to collect the money to build the revenue stream. Why would we not put that money back into Fathom to replenish the whole system overall? Because if we did that, then yeah, we wouldn't actually be supporting our own token if we were giving out the rewards in stables. And that would hurt every single person who buys in. And honestly, it wouldn't be worth it, because now you might as well just give somebody money and get a percent or a 0.5% per day back. It takes away the whole dynamic portion of this entire system. And so again, right, if the price of Fathom dumps or drops, massively, we're still basing it on the value of Fathom you're receiving based on the mass, which is also based on USD value. So $10 a day at a penny price of Fathom is what, 100 tokens? And then if $10 a day, if that drops 99% or 90% to 1 cent, now you're getting 1,000 tokens instead of 100, because you're still getting that $10 per day.
Mm-hmm. Yeah, so it is that's kind of the beauty of having the rewards not be just a rewards token that we've seen, in previous DeFi projects. And that's the problem that you guys really came into this trying to solve, correct?
Yeah. How do we keep it exciting for traders, and but also stabilize that whole reward system so it can pay out if the price does drop off. Awesome. Typing again.
It's not based on a token amount. Essentially, it's based on the value of those tokens.
Right.
Yeah.
Yeah.
He
So
said,
like,
I
okay,
like
here.
this.
No, I see that. What's up, Austin? Woo! Here's a funny thing, and I know this is a I don't know who follows this still. I know people do, but like drip, right?
Mm-hmm.
And drip is interesting because when you stake your tokens, you can never unstake them.
Mm-hmm.
It's essentially 100% staking tax. They just don't tell you that, right? But in their case, if you bought in at, let's say 150, and if they were following our model, when the price got down to $1.50, you would have been receiving the same number of tokens every day that you had staked, because it would be based on the value. And so at this point, if you had staked, let's say 10 tokens at that 150 level, because I think the price is like, what, 50 cents? You'd actually be getting like 3 times your staked number of tokens every single day in rewards. And so that's where this whole thing of the value base really changes how this game and the rewards work. And it's hard to, you really have to kind of take everything you know about DeFi and just throw it out the window and start with a fresh perspective to visualize how all this stuff works when you combine those stable rewards with this tradable token.
Yeah. Can we take a step forward into this next question, because that definitely makes sense. I just want to make sure we hit all these.
Yes.
Someone's asking about what the reasoning behind you guys making buy taxes higher than sell taxes. I know you guys addressed this when we first chatted. So
okay. Oh, that's actually very easy. Well, okay, so if we do a very low buy tax, right? For some reason, everybody's like, "Yeah, there's low buy tax, you get more tokens." But then they do a higher sell tax. But what are they collecting the taxes for? Usually to support the project. So they're essentially waiting to collect the majority of their money until investors give up and leave. How does that help people buying in? So we've changed the focus. Like, if you're coming into us, you're investing in us, we're going to collect that higher amount now so we can support your investment that you're putting into here. So we're not waiting until you give up and leave, potentially at a loss, before we can kick up the marketing or build our revenue stream. We're doing that up front. Because to me, that makes sense. Why wait until people leave?
Yeah, 100%.
So
that part I definitely could say makes a lot more sense. Cyril, would Fathom be interested in participating in a battle to try and win a minimum of $50,000 of buyback and burns on your tokens? Cyril, might be better to shoot them a DM. I can link you guys up.
okay, so we are not. Well, first off, we are not burning tokens. Honestly, in my opinion, burning tokens is kind of, you have to burn so many for it to really make a difference. That was one thing I learned with Everrise too, because they were like, "Oh, we got 20% burned." I was like, "All right, what does that mean?" So I set up the AMM based on current conditions, added every token to the Everrise pool to see what the price would be, and it was down, 99.999% still, with 20% burned. Because when you look at it, the liquidity pool at that point still only has between like 5 and 10% tokens. And so 20% not being burned, or not being burned and can't be sold, you still have 70 other percent that can be sold. And by the time you sell those into the liquidity pool, the price is garbage anyways. So it doesn't, the burning of tokens doesn't really make a whole lot of sense unless it's a very long period of time, and it's only beneficial to you if you're in before the buyback or before all the burning occurred, because at the current price, those burned tokens are already basically priced into the current price.
Depending on
If
when
that
they were
makes sense.
bought. Like if you're doing a buyback and burn, then you're adding 50K to, or let's say this random amount, 50K. You're adding 50K to liquidity and then saying that I'm not going to sell my tokens, unlocking them essentially. So it would add liquidity. But I can
It would
understand
add to liquidity.
the way projects state that they're burning is the problem, because they're not really doing anything aside from pulling liquidity and pulling the same amount of tokens and saying, hey, they're locked. Which, yeah, that I agree with you there 100%. But yeah, I know Sarah was talking more about buying and burning.
If he wants to do a $50,000 buyback and send them to our ocean, which now will help our price, they can't be immediately sold, and it's actually going to increase rewards for everybody, because also, you know, we're sending out a percentage of that ocean. So if all those tokens get added to it, the number of tokens coming out every wave will increase. That would be amazing, because now you're helping the protocol, but you're
Yeah.
also helping every investor, and that's what we're all about.
Yeah.
And we're launching on Command Swap, and that was one of the first things I asked is, okay, when you get your liquidity that you're receiving in these fees, what are you doing with the token side? Because that's, we've all seen PancakeSwap destroy projects when they pull liquidity, sell the tokens. And he's like, yeah, we'll probably burn those. I was like, no. I was like, Lou, what you should do is find out what each project is doing and do that. Like, I was like, don't burn our tokens. We don't want our tokens burned. Just send them to our ocean. That would be great. And he's like, all right, yeah, we could do that. So that's what Command Swap is going to do with ours. And that's one of the reasons I'm actually excited about launching on them.
Gotcha. Awesome. Yeah. It's funny to me when projects go and start saying that they're doing buybacks and they're burning. They're like, oh, the 20% supply is something we've seen. And I'm like,
Right.
people think it's a good thing, but it really realistically does nothing aside from make it more volatile. You're locking liquidity away. So that means less people can leave. And so it doesn't do anything aside from, the price can go up faster, but it can also decrease much faster. Sorry, the next question we got. What marketing strategies are you guys using? And what's the maximum minimum that you can invest? I believe in a pre-sale, they're asking.
All right. Well, so there's no max and no minimum for this pre-sale. It's an uncapped pre-sale. It works like a fair launch pre-sale, which I know Pink Sale does, but we're doing it a little bit differently, because what they do with theirs is they split the total tokens for pre-sale liquidity. We'll just say 60% of those tokens are going to go into the pre-sale. And so as more money is raised, they just take the total dollars raised divided by tokens being sold, and that's the price. The thing is, though, then the price can increase pretty quickly. So what we're doing, though, is as more money is raised, we're actually going to add tokens to that being sold. So it's going to actually raise the price at a slower rate. And so we're trying to do that to be more fair. So it's not similar to the way the AMM works, but not anywhere close to the price swings that the AMM would cause. So kind of combine the two ideas there to create this pre-sale, so it doesn't get way out of whack, or if we're left with, if we manage to raise a crap ton of money that we're at such a high price, using only 60% of those tokens for that.
Mm-hmm.
So yeah, that's 60. If we started 60%, it could wind up being 70 or 80% of those total pre-sale liquidity tokens are sold in the pre-sale.
Awesome. Yeah.
As far as marketing strategies, so Truth Seekers will continue to market us through the YouTube campaign. Also, we are partnered with RBXS. We've actually, I know one of the leaders of there. That's how we got up with them over a year ago. So we've actually been partnered with them, but they have about 100+ people that are constantly out there shilling. I mean, shoot, you go on Twitter and just search Fathom, and we're going to be one of the top spots, and it's like everything about us. There's occasionally like a sponsored tweet or something in there, but it's all about us at this point because they've been mentioning us and shilling us for such a while now. And so that, and plus James with them, he's constantly. We've got so many people. Like I need to get with him later because he's got so many other groups that we're going to be doing stuff with over the next couple days. I can't even keep them all straight, but it's going to be pretty massive. We're just trying to get the word out there as much as possible.
Yeah, definitely a good handful of things you guys are tackling on the marketing side. Let me make sure that I didn't miss anything here. And by the way, Cyril does want to connect, so feel free to shoot him a DM. He missed it and just didn't want it to be missed. So Austin wanted to go into some specifics of what trading bots you guys are using, what what kinds, where you're using them, etc. He said.
I think I'm gonna let Bishop talk for a moment. My voice is getting. You there, Bishop?
Yeah,
get some
no
water.
worries.
Yeah.
Yeah, so we currently have a proprietary bot that we're just able to get. It's a market maker bot and it operates on central exchanges aggressively. And we'll be getting that set up here very shortly. But currently, that's the only bot we have. But we're planning on going on as many bots as possible. So arbitrage bots, flash loan liquidity bots. It's just a matter of time. So we're just getting going, and our developer is able to create these things for us, and we gotta just keep going. So we have one bot that will be up and running. So right from the beginning. But it's going to be a snowball effect of bots. We're going to be acquiring more and more bots as time goes.
We actually have several connections of groups that do. Okay, at this point, they claim to build bots, but if somebody goes, "Yeah, I could build this great bot for $500," I'm kind of a little bit skeptical on that. And so we're talking to several people and really kind of digging them out to see if they are legit and seeing what they actually have made in the past. But the goal is to have several different bots between DeFi, decentralized exchanges, and centralized exchanges. We're trying to keep off the centralized exchanges as much as possible because we know how the feeling is towards that at this point. But yeah, we're trying to have many different style bots because all of them are going to perform differently in different market conditions, and so we want to make sure we're able to take advantage of the current market conditions any way we can. And so the one we have right now, it is centralized exchange based.
Gotcha. It's really working just with the trading bot on a centralized exchange and working it that way. I'll see if he does have a follow up or not, but definitely makes sense to me. Kind of going through, Nate. I know you were digging through another one. Nate said there's some. He's just in a soft shell about. So he's a trader, and he's like, there's some smart traders in Cardinal House. Some use bots. Are you willing to talk to them about the bots that they run? Totally up to you guys.
Oh,
We can definitely have a conversation about that later as well.
yeah, we're not closed to any kind of partnerships. We're not going to take all of our funds and put it there, but I would rather have 50 different things generating revenue than 5, because if one of them
Yeah.
dies in 5, that's a lot. If one of them dies in 50, it's not that big of a deal.
Yeah.
So absolutely.
Austin said potential Cardinal Chirps bot partnership. Definitely. And we
Absolutely.
Let me make sure. Austin, you're in the chat, right? We can definitely share some info on what things. He dropped our kind of record in there for the week.
But is he in our chat? That's the real question. I don't. If he's not even in ours, I don't know about that. Because it looks like. Oh, did he just block me? He says no servers in common. No, I don't think he did. What did he do? It's all good.
But,
he must have settings. He must have settings where I can't see what we have in common. Friends. Oh, there we go. That now he's getting it. Let me leave a server. Oh, leave a server. Limited. You can only have 1,000 servers, Austin. I don't know what the number is, but I know it's a lot. I'm sure there's half of those he doesn't even look in because there's no time. There's no right. I've got so many servers. I'm like, why am I even in these? Because I don't look at them.
Yeah.
I need to cut those down.
100%, man. I feel that.
That's fine. Oh, he's telling us who. That's funny.
Yeah, Nate was talking about the smart trade. Societal is a great person to talk about that as well. No, but Nate, you are. I know what you mean, but Nate, you are a really good trader as well. From what we chatted about. But let's.
Yeah.
There was one other piece that I think I missed. Okay, yes. Austin was saying the biggest thing is Boston always win. And depending on the revenue for buybacks and burns, it could be a slippery slope. Do you guys have any plans like in play to make sure that doesn't happen, or is diversification the main plan you're taking to hedge against that risk?
I don't know what happened to your mic. It's hard to. I didn't catch all
Oh,
that.
I'm sorry. I'm sorry. Can you hear me now?
Yes, that's a whole lot better.
Okay,
Yes.
awesome. I had it. I think I had it facing backwards. Apologize about that. So he was asking, the biggest thing about bots is they don't always win, and depending on the revenue for buybacks and burns, it could be a slippery slope. Is diversification for those trading bots the main strategy you have for ensuring that to really try and ensure and hedge your bets and minimize that risk?
Yes, so we'll
Mhm.
be diversifying mostly into validators and such.
Yes.
That's why, because the bots are a slippery slope. They're not always winners,
Mhm.
but the validators are always winners. So we'll be mostly going into validators and putting our risk capital into the bots. But everyone nowadays is just like, as soon as you say the word bot, they hyper focus on that. So we will be diversifying also in our bots. Like we said, we'll be having more than just one bot. We'll be having arbitrage bots. We'll be having market maker bots. We'll be having flash loan bots. There's a whole bunch of different type of bots that we can have as well that operate, like Sergey said, in different market conditions. So we'll be diversified in the amount of bots that we have and also in the type of investments we make.
Yeah. I think the validators 100% makes sense as far as the stability piece, and trading bots being that more aggressive stance, which is kind of along the lines of what I think you're getting at as well. So
Yeah,
100%.
we were also. We were. I've been looking at a lot of other, just projects in DeFi to help, increase that ROI over what the validators do. But most, like, they're all failing. So now I'm like, maybe we shouldn't go to other protocols that are, they don't, if we've put money in, we got the 1% for 2 weeks and then it all goes away. Well, that doesn't do anything for us. It gave a little bit of revenue, but now the base of that is gone. So it's,
Yeah.
yeah, kind of. Come on, other projects need to do better. Let's go, guys. Like, seriously.
You're trying to put money into other projects and they're failing. So yeah, we've had
Yeah.
there are a handful of projects like that. It's kind of like this whole inception thing where every project is investing into each other, and the first person to go down takes the rest of them down with it.
Yeah, we just watched that with FTX, right?
Oh gosh.
How many exchanges went bankrupt because
Yep.
of them?
Yep. Well, yeah, exactly. That is a very, very close similarity. Um, but yeah, so very, very Cyril saying my embarrassment. Okay. Okay, buddy. No, I'm just kidding. But yeah, so I do think that the strategy you guys are overall coming into this with is really, really phenomenal. And I'm excited to see how everything goes as far as pre-sale, because you want to touch a little bit more on that. I know you kind of briefly went over it, but I'd love to hear a little bit more on how people can get involved, and these dates that we got coming up here.
Yeah, well, the date is today.
Yeah.
Today's the day. So our pre-sale is actually launching today at 3 p.m. Eastern, 8 p.m. UTC time, and we'll be going live on our D app. So anyone can join at any time after 3 p.m. today.
And if you don't know what time that is, go look at the presale.fathom.finance and there's a counter. It'll count down. It's like 2 hours and 19 minutes from now, I believe. I'm looking at the
Well,
clock.
the counter is on Fathom.finance. So if you go to our
Go look
main
at the
website,
presale page. I got all that stuff straight last night. I didn't go to bed
okay.
until that presale page was correct. That's why I was in bed at like 5. I only had like 5 hours of sleep. My wife kicked me. She's like, "Don't you have an AMA soon?" I was like, "Oh, yes, I do." No, yeah, we got the counter right there. So 2 hours, 18 minutes, and 17 seconds. So the starting price is 0.002 US dollars per each. which the rate is also 500 Fathom per 1 BUSD. So once we hit about 300K contributed BUSD, that price will start to increase. And then I couldn't quite get everything to work automatically. So as more money does go in, I will be changing the number of tokens in there. So the price will go up, and then all of a sudden it'll drop some as more tokens are added, and then it'll continue to go up. So that's how it's set up. Unfortunately, I couldn't get that calculation to become automated. But yeah, we're just trying to do everything as fair as possible on this whole thing. We did have a seed sale, which was at 0.001, and that's money that we collected starting in like May, basically through development, because this wound up costing a lot to create. And it was actually really nice the way we did this. And anybody out there looking to build something, I recommend this highly, because what most of these projects tend to do is they'll launch like a stealth launch, and then this is what we're gonna do. And then people join in, and then it's like immediately, if the price drops, everyone's complaining. When is this gonna come? When is this gonna come? And people get unhappy, they sell out, they leave, and it kind of can kill the project. So instead of doing that and worrying about a token being live, we were just collecting based on BUSD and basically as we needed it. Like, we didn't just collect, $100,000 up front. We'd reach out to, hey, we need another, $8,000 to pay off. Do you have people that want to put in? And then they'd put into it. And, we've just been recording that all along. So it's been so much nicer than trying to deal with a tradable token at this point. And so, yeah, now we're fully built. We've fully tested. We haven't had anybody at all like, hey, when are you launching? When is this going to happen? When will I get my investment back? Like, it has not happened at all. It's been so nice. It's been very wonderful. And so, yeah, if anybody's looking to build, don't launch and then build. Just freaking collect money, build out, and then launch, because it's a much different situation. And it's, nobody does it. So we're going to find out what this strategy does, because, even with our partners, they launched with promises, and it took them, a week or two to get staking up. And now other things have gotten delayed. And so our delays were just, we're going to launch a little bit later, but nobody's investment value has been dropping this entire time, which is where the real problem comes with utilities trying to build after launching, because other people are going to leave. And now you put $1,000 in 3 months later, when this stuff is finally being done and built and coming out, you've got like $10 worth of tokens left. And just because of the value changes. And then at that point, they have to get mass adoption of their utility for it to make a difference. And I've seen that so many times. And by then, there's been the hype, maybe, and I've done this before. I see something, I go check it out, and I'm like, all right, cool, this is hype, maybe buy in, maybe sell out. But then 3 months later, you see their name pop up again. It's like, nah, whatever. Then you don't pay attention anymore. And that's what we were trying to avoid. So now we're new to everybody here, and we're fully built. We're ready to go. This is getting exciting.
Yeah, man. Yeah, you're definitely going about it the right way, building it and then getting it out there. 100%. I'm with you there. A lot of people come into this with not a lot of business experience, and I think that leads a lot of these unfortunate decisions. And yeah, I get it. People need funding for a lot of the things that they plan on doing, but it takes its toll later on. If you don't put in the work before, you're going to end up getting burned. And so you see a lot of these unsuccessful projects trying to, make everything up on, 2 years down the road after they've already launched and people are involved in all those kind of things. And it's definitely not, in my opinion, not the ideal way to go. You can certainly succeed if you do it, but I think that it's generally not the best. So
right.
Really, really
somebody asked us
true
about like, oh, would you have a roadmap? And I'm like, what does a normal roadmap look like? We're gonna launch a website, we're gonna launch the token, do marketing. Like a normal roadmap we have already completed. It's already done. Like all that stuff is completely done. We've built out the white paper, which was obnoxious and took a very long time. Like we probably spent more time building out that white paper than most projects do on their entire project. If you haven't checked out the white paper, you really need to. It's really good, and it'll break Bishop's heart if you don't.
Yeah,
He
it
put
100%.
gazillion hours.
It makes things very, very clear. So seriously, like if you are in here and you are interested, pre-sale's coming up in a couple hours, go read the white paper, please. The more informed you are, the better. Even if you are just semi-interested and you just want to learn a little bit more, go check out the white paper. It's very, very well written. And if you have questions, I'm sure pop into the Fathom Discord and feel free to ask. Is there anything we haven't touched up on yet? To both you, Sir Jay, and Bishop. Austin's up here.
I know. I see Austin's having some conversation,
Yo, what's up, dude?
taking over the chat.
Exactly.
I wanted to patiently wait at the end. I wanted to shout you guys out. This totally isn't like meant to be a thing or anything. I just wanted to say I can like appreciate the enthusiasm behind your project. I know a lot of people that come up here and sit in the hot seat for AMAs, they look at this more like a sales pitch, and I think I personally can tell, I guess, in your guys' voice that you can do that like you actually feel passionate about this. I would like to just ask one final question. What do you guys like with the entire goal of Fathom? Like, what's the end goal? Not really end goal, because that kind of assumes that you have an end that's like it's going to end at some point. But what is your overall main arching goal, if you could just word it in a few sentences, of what you want Fathom to add value to the entire crypto space and potential, and obviously the users that use it?
Well, I can tell you our overall goal is to have as much revenue coming in as we're giving out in our staking rewards per day. So as soon as we meet that mark, it'll be a huge milestone for us.
And do you have a specific kind of like a measurable goal of revenue that you have in mind, either on a weekly, a monthly basis from both node validators and trading bots that you're trying to hit?
It will be fluctuating based on the amount that we have to pay out per weekend, month, and day. You know, so the mass is basically like our overall
It's our
investment
Yeah.
liability. Thank you. That's the word I was looking for. It's our basic liability. So if we have 1 million mass, then we have to make that $10,000 a day in order to give out. So if we had 1 million mass, then we would be wanting to bring in about $10,000 a day.
Gotcha.
goal.
Okay.
Then if a lot of
Because I know you said
If a lot of people leave and we only have 500,000 mass, now we only have to bring in $5,000 a day because that's all we're paying out.
Right. So it's about getting it to that point where that number and the amount we're bringing in is the exact same. It's going to take some time. It's not going to be right away, but it's something that we're going to be working towards every day.
And I would actually go beyond that.
And that's the thing. That's the thing I was meaning earlier when it was like, because I know you guys said you were confused about what I meant by exponential versus linear growth in your revenue model, is where you got two main revenue sources that you guys mentioned with node validators and trading bots. And I have experience using both of those. And I think a lot of people here too also know that validator nodes, they don't produce the best ROI, but those are more of a long-term thing that maybe you can get 10% on your investment every single year, which isn't a lot as far as paying rewards go, but it is something that if you're bullish on a specific native token that you're hosting the reward on, then it is pretty beneficial long term, especially if there's price appreciation involved. But another thing is with trading bots, they are inherently more risky and they're not guaranteed. As we know, all those ones that you're referring to, they're all Ponzi's. None of them was actually using real trading bots because they don't offer a guaranteed X percentage a day. But with that, they can also lose. So I was just kind of curious, as far as your revenue model goes, how that would exponentially grow with, if you did catch traction and more people are constantly going into your ecosystem to need that revenue share. As that happens, you're going to have this exponential curve of people needing it versus a linear one, meaning that instead of growing your revenue by X amount every single week, you're going to have to grow it by X point whatever, because it's going to have to keep on growing to scale with the demand.
Well, yeah, and by taking a percentage of our revenue and using that to compound, that's kind of doing that, because every time we compound, now it's starting with a new calculation, right? So we add to it, it's going to produce more revenue. So every time we're adding that, we'll just say the 15%, which is the minimal we're going to do. So that will exponentially grow over time. And I agree, right? The validators are not hugely producing, but it does provide a great backbone. And the ways this system is actually designed and the way it operates, as long as revenue is coming in, we really can't fail, because we will be creating our own buybacks. And the whole thing about this, when you really start to look at the big picture, as that daily APY does drop, especially below 1% or even 0.5%, people are going to leave. And that's good, because that reduces the amount of revenue we actually have to bring in to sustain what we're paying out, because we're going to be paying out less, because again, it's all based on value. And so it basically, we're going to see the price of the token go up and down. We'll see the total amount of mass go up and down. As an investor, if you don't do anything, you're going to see your total mass increase. And so it just creates this huge dynamic that we really haven't seen before. And I've visualized it in my head 1,000 times. I've put it on spreadsheets just to make sure I'm not going crazy. And it all kind of checks out. But a lot of this, so it doesn't depend on investors doing what's normally the right thing, which is buying and holding forever. It doesn't depend on that. That actually is more painful for us than anything else. What normally is considered a bad act or bad actors of people that buy into a protocol of leaving, selling out of the system, that's hugely beneficial to us and all of the investors. And so, yeah, it's gonna, at some point in the future, it could be years, it could be months, who knows. That revenue will equal what we're paying out, just based off of total mass existing, how much we're coming in, plus the current daily, the APY and stuff. So all of that stuff, they will equal up at some point. And we're not going to die when we get to that point. But to go on to, we lost our host. You were saying
he had to. He just shot me a message. He had to go take another call, so he was like,